Can you hear me? I think mic is working now. So I see the full room, so I think we can start. So good morning, everyone. Welcome to National Bank of Slovakia. My name is Roman Vasil, and I will keep you up through the whole conference to get through it very smoothly. Two quick things at the beginning. The agenda is on the walls, so you can have it on your phone whole day. If you have any question during the session, the QR code with the Slido will appear on the LED screen. The moderators will read the questions loud out during the sessions, and we have a full program here today, but the real value of the day like this is often just in the room. So I would like to encourage you to ask the questions, network together, and enjoy the day. So without any further ado, to open the conference, please welcome Vladimír Dvořáček, member of the Bank Board and Executive Director of National Bank of Slovakia. So Mr. Dvořáček, please.
I hope that my speech will be shorter than average insurance policy terms and conditions. But, ladies and gentlemen, distinguished guests, dear colleagues, let me welcome you here. Let me welcome you to National Bank of Slovakia to today's conference on insurance protection gap. I think that this is a very good topic for this conference, very tangible and very interesting. So let me have some comments on this. Let me start by thanking you all to joining us. Whether you have traveled from abroad or from shorter distance, your presence here today reflects a shared recognition that climate change is no longer a distant or abstract risk, but a tangible, systemic challenge with profound implication for societies, economies, financial system, and particularly insurance. But first, I would like to extend my very special and warm welcome to the chair of European Insurance and Occupational Pensions Authority, EIOPA, Ms. Petra Hielkma. Madam Chair, thank you for joining us despite your very demanding schedule. Your presence is particularly meaningful as EIOPA has been a forefront of addressing the insurance protection gap, fostering resilience, strengthening supervisory and policy responses across Europe and beyond. We greatly appreciate your leadership and your active engagement to this crucial topic. The concept of the insurance protection gap, means the difference between economic losses and insured losses, has moved to the center of the policy debate. Climate-related events such as floods, droughts, wildfires, storms, heat waves are increasing in frequency and severity. They are occurring also in regions where they were previously rare or unknown. These events do not respect borders, institutions, or sectors. They affect households, businesses, public finances, and ultimately also financial stability in the end. Despite rising losses, a significant share of climate-related damage remains uninsured or underinsured. These gaps expose these citizens and economies to greater vulnerability, slows recovery after disasters, and places increasing pressure to public budgets. Addressing it requires collective action from insurers and reinsurers, supervisors and policymakers, governments, local authorities, the technology sector, and academia. Throughout today's discussions, we will explore the insurance protection gap not as just an insurance market issue, but as a systemic challenge, one that requires coordination across levels and across disciplines. Let me now briefly introduce the structure of today's conference, the agenda. First panel will focus on insurance protection gap as a global and cross-border challenge, discussing how international, European and national approaches can be better aligned to strengthen climate resilience. The second panel will turn to national and regional perspectives, highlighting how climate risks affect insurance markets across Europe and CE region, and examining the roles of regulators, markets, and public institutions. And the third panel will take a practical and forward-looking view, showcasing how data, AI, innovating technologies are already being used in practice, from satellite monitoring to parametric insurance, to turn climate risk data into faster responses and stronger resilience for communities and economies. Ladies and gentlemen, what unites all these panels is a shared understanding that closing, or at least reducing, the insurance protection gap is not about single solution, but about building an ecosystem of risk awareness, prevention, innovation, and cooperation. Insurance has a vital role to play, not only as a risk transfer mechanism, but as a partner in resilience. Supervisors and policymakers have a responsibility to create frameworks that enable markets to adapt, innovate, and remain trustworthy in rapidly changing environment. Today's conference offers an opportunity to exchange ideas openly, challenge assumptions, learn from each other's experiences. I encourage all participants to engage actively in the discussions, to ask questions, and to take this opportunity to build connections across sectors and borders. Once again, let me thank all speakers, panelists, and also organizers for their commitment and contributions. I'm confident that today's discussions will contribute meaningfully in this country, at least, to share the goal of reducing the insurance protection gap and strengthening climate resilience for the benefit of all citizens, markets, and mainly future generations. So thank you, and I wish you a very successful and fruitful conference.
Thank you, Mr. Dvořáček, for your opening speech and the conference. And now I would like to welcome our keynote speaker, Pietra Hielkema, Chair of European Insurance and Occupational Pension Authority. She has one of the best views in Europe of how big this protection gap is. And I'm very looking forward for what you will share with us. Thank you.
Thank you very much, and good morning, everyone. It's a true pleasure to be here today. It really is. It's always so much better to be in person, although also I understand some people will be online, so hi to you as well. But this is really how you connect. So Vladimir and also Julia, thank you so much for a very warm welcome. It's my first time in Slovakia, and when I called home yesterday evening, the first question was, did you see the castle? And I said, I did. You're all used to that castle, but for us, it's a real castle. And I saw it in sunset, so what a beautiful start. But also what an important day today, because we're discussing a very important topic that indeed, hopefully, this discussion can help not only this member states, but I think all of EU and in fact outside of EU. This is a risk, a challenge, something we will have to deal with going forward. And let me dive into that today. So we stand at the crossroads where climate change and economic transformation and societal expectations converge in ways that will define our resilience for decades to come. And so among one of the most pressing challenges before us that cuts across the borders, sectors, and also institutions, the insurance protection gap in the face of intensifying climate-related risk is a very important one. And over the past years, we have been witnessing very clearly that this risk is there. Losses from climate-related hazards such as floods, droughts, storms, wildfires, heat waves, they are rising in frequency, and vector storms also in some parts of the world have incredible damages as a result. Hail is going up tremendously. So there's a whole list of things you don't like to happen that is happening more frequent, more severe, and getting more unpredictable, based at least on the models we have today. So global warming has developed very rapidly since the 1980s. In Europe, for example, if we look at the damages since the 1980s, each of the past 4 years is in the top 5 of economic losses by climate-related events, clearly showing that this risk is really up and needs attention. The proportion of those losses, because those are the losses, but the proportion of those losses that is then insured is not keeping pace. In many regions of Europe, the protection gap, and that is the difference between the losses we see and how much of that is insured, is very significant, leaving households, businesses, and societies very vulnerable, and ultimately also government budgets. So EIOPA has been raising alarm about Europe's significant protection gap against national disasters. And we do so because, frankly, the number is alarming. It is 75% of net cat losses not being insured in EU, and that is really an average. So there are parts of EU where we're talking 95%. We're talking parts of EU where we maybe are at 65%. But even 65, it will never be zero. But 65 still is too much. In the network for greening the financial system, we estimate that by 2050, if current policies go unchecked, we're looking at a worldwide GDP loss of 15%, 15%, simply and only because of climate-related events. So here, the direction of travel needs to be clear. A warmer planet means more extreme weather, means more losses. And the real risk is that there is already a sizable gap that will then even widen further. So we're talking about closing the gap. But if you look at the speed with which weather events are impacting us, it actually might be widening, and maybe even stopping it from widening in itself will be a huge exercise. And that has an impact also on insurance. So the German Insurance Association warned that property insurance premia could double within a decade due to climate-driven claims. And in high-risk areas, insurance may actually become unavailable as insurers will withdraw or introduce prices that are too high for people to afford, or insurers simply exclude the risk. So uninsurability, not being able to get an insurance for the risk anymore, or unaffordability, not being able to pay for the risk anymore, will become a very tangible problem for certain regions and perils unless we make very rapid progress in risk pooling and in mitigation, both. We need collaborative action to address the protection gap, which in turn will safeguard our financial system and improve the resilience of society. So today I want to talk about 3 themes on how we can get there. First of all, how does the protection gap impact the resilience of our societies and our economies? Second, what is the insurance industry's role? What can the insurance sector do to respond to this increasing risk? And why do we need a structured and coordinated approach to address this gap? So European citizens and firms are underinsured, very much underinsured, definitely in Europe, against flood. Flood is the big one, but also against wildfires and windstorms. And the figures are staggering. If you look at the Eurometer that we do every year, EIOPA's 2025 Eurometer in this case, only 17% of respondents have a coverage for property damage used by natural catastrophe. And to better understand this persistent low take-up rates, EIOPA conducted a study, a behavioral study, to see what is the attitude of Europeans towards natural catastrophe insurance. And it showed that on the demand side, barriers and drivers that impact the willingness of people and businesses are there. And that includes levels of perceived unaffordability. Very interesting. I would call that low-hanging fruit. So you ask a person, why can't you do it? Can't afford it. How much do you think it would cost? Or how much do you think you could pay? So much. Well, that's actually the price, but they think it's more. So I think this is a bit of communication. But there's definitely also more difficult problems to solve. There's a lack of clarity in terms of conditions. I might get the insurance, but does it really cover it? There is a previous negative experience with an insurance claim. I was insured, I didn't get anything. Why would I pay insurance? There's a high expectation, a very high expectation, I might say, particularly in Eastern Europe, about state intervention. Why would I get insurance? I mean, the state will help me. And definitely in cases of catastrophe. And this is a problem because maybe the state will step in and a politician will be on the news saying, we will send you help. But will it really come, and will it come quickly? And does it come quickly enough to also avoid second rounds of effects? Because economically you need to continue, but you can't if everything is still not fixed. So this is a problem. So we also, as EIOPA, examined the clarity of product information. So we also looked at the side of the supplier. And we did that by looking at the insurance product information document, what we call the IPID. So while the findings suggested that many insurers demonstrate good practices in disclosing information, some IPIDs actually remain rather complex and overly reliant on separate documents that people then also need to check. So as a result, many consumers and businesses assume they have sufficient protection, but it's not actually the case. So this is what we call the insurance illusion. And it leaves too many homeowners and business owners at risk of thinking they are protected, sleeping well at night, but not actually being protected. And that's not because the insurer is disappointing them, it's because the conditions of the policy were not clear. So for households, this protection kit means that a single climate shock can lead to really long-term financial hardship. And for small and medium-sized enterprises, the backbone of our economy, and not only in this country, I mean in EU, underinsurance can determine whether you can recover from a disaster and also can recover faster so you avoid second-round effects or not. Disruptions to supply chains, to energy systems, to local infrastructure can ripple across entire sectors. So for governments, the protection gap often results in increasing pressure to act as the insurer of last resort. We just said that. Actually, that's what consumers count on. That's what citizens count on. But this places a significant strain on public finances, especially as disasters become more frequent and more destructive when fiscal capacity is stretched. The ability to invest in long-term prevention also is weakened, and it creates a cycle. I need to now pay first for these damages, so I can't invest in the prevention, so more damages will happen. And we see this already starting. So when I started as the chairperson of EIOPA in 21, it was very much the insurance industry that flagged this is going to be a problem. Dear Petra, we need to work on this. But governments were working on all the other problems we have. We have many issues, and then there was Corona as well. But what we see is that because of those last 4 years, the damages being so alarmingly high, more and more governments start to talk also to EIOPA, more supervisors start to raise and discuss this nationally, because it's clear that this is not sustainable, also not for government budgets. So we clearly see that the ability of society currently to recover is suboptimal, and we need to work on that. So a first conclusion will be that we need to have better communication. We also need easy and acceptable and understandable information about the risk. We need simplified and more consumer-friendly processes, and we also need more standardized products. And that all could already help to address the awareness of consumers, the uptake of products, and avoid the insurance illusion. Now, let's look at the insurance industry. What can they do better to respond to these risks? Insurance is a cornerstone of how Europe builds resilience in its entire architecture. It is supporting economic activity, it strengthens recovery, and it provides financial security to people who need it most. But this sector now faces a world of uncertainty, where modeling assumptions are shifting, where long-established risk patterns no longer hold. Put that in simple words, insurers assess risk on the basis of data from the past. But if the future is very quickly changing so fast and having so much more damages, then how much can you still rely on the assumptions based on data from the past? This is a question. So in particular, when it comes to climate change, both the physical risk they face in their underwriting business and the transition risk they face in their investment, this is something for insurers to consider. There's several areas where the insurance still can take a lead. And I would like to mention two of those areas. So the first is in strengthening their underwriting models and in their risk analysis. If there is one industry that can assess risk, it's this industry. And I appreciate this has gotten harder, but then let's get down to it. The world of predictable hazard cycles is over. Insurers must rely not only on historical claims anymore, but increasingly on forward-looking climate projections, on high-resolution hazard maps, on satellite monitoring, and on new modeling methods to incorporate deep uncertainties. More precisely, insurers need to integrate their climate scenarios into their underwriting and pricing. They need to use geospatial and remote sensing tools to understand exposure more precisely, while also leveraging, of course, on artificial intelligence, on machine learning, to analyze very complex data patterns. And why is this so crucial? It's crucial because better data will lead to better pricing, and better pricing will lead to better risk management. And here I want to underline that if there is a risk that has a price, that is the price. A price is a very good indicator of the risk that you are dealing with in this particular area. Now, the second area is also that insurers need to focus on reinforcing the link between insurance on the one hand and on risk prevention on the other hand. As with any insurance system, pricing is very effective when it accurately reflects the risk. And with climate change, this requires continuous reassessment. Are we still on it? Did the risk go up? Or did it go down maybe? With climate change, it requires this assessment because the risks move so quickly and we still need to understand them. So recently, also EIOPA did its homework and we recalibrated the natural catastrophe capital charges for Solvency II. In the Solvency II standard formula, we have already a module that considers net cat risk. And we updated that, and we have to. And what was interesting is that many member states, our NCAs, for Slovakia, it's Julia in my board, but every member state has someone on the board with a team behind it. They all looked into it. And some member states did not have certain risk in the dashboard because so far they didn't need it. Flooding, mud streams in the Nordics, certain kinds of severity of forest fires in the south. So we really had to change the model and better understand what was necessary. But we also must be clear-eyed about this purely risk-based approach. If the full burden of rising climate risk is transferred via the price directly on households and businesses through a higher premium, the result will probably be that it's no longer affordable for many, and then we are there in a situation that we know the risk, but we can't insure it anymore. We will have lower insurance penetration and weakening societal resilience, and that's not the outcome we want. So the lose-lose scenario for policyholders, for insurers, and for public authorities is that we work on the risk, we see the risk, and then make it unaffordable to insure. But how do we solve that? So to maintain a delicate balance between, on the one hand, actuarial soundness that we need and market viability, stronger adaptation measures are essential. The more we invest in prevention, in resilience, in risk-reducing behavior, the more viable insurance remains a tool for protection. Insurance is not just a financial mechanism, it is also a prevention mechanism, and that role needs to also build further. Through smart incentives such as premium discounts for effective mitigation measures, transparent communication of risk, and structured collaboration with local authorities, insurance can help to bend the loss curve over time. This concept, often referred to as impact underwriting, so not just underwriting, but impact underwriting, enables insurers to encourage and reward policyholders who take meaningful steps to reduce their risk exposure, or also sometimes just incentivizes by saying, if you want this insurance, I first need you to do the following. And this is very relevant. And it's not new. I always say that in the Netherlands, I cannot get my bicycle insured if I do not have a certain kind of lock on my bicycle. And I do not get a payout if I can't show the key proving that I locked it. And it's just as simple as that. So saying I need my house insured, and the insurer is saying, well, you're in an area where there is a risk of more flooding, so I need you to have tiles and not a wooden floor. And I need you to have your electricity upstairs and not downstairs. I think it's a fair requirement to limit the losses. Sometimes, if you can't build somewhere because of flooding, you can talk to the city. You can talk, why are they handing out licenses? Or you can talk about preventing that flooding risk with a dam. So there's different ways. I come from a country where there's huge investments in dikes, which is one way to deal with the risk of flooding. But there's several ways you can deal with that. But it starts with awareness and then prevention and adaptation, mitigation. So we are currently assessing how such risk-reducing measures should be recognized also in the prudential framework. Why? Because we hope then we can incentivize more of this impact underwriting. We have a very simple aim. We want to ensure that the regulatory system supports adaptation, incentivizes prevention, and reflects genuine improvements in resilience if they occur. Climate change challenges traditionally the climate change challenges the traditional approach that we have to risk assessment, and that is also why we will continue to strengthen our supervisory practices on scenario analysis, on stress testing, on governance of climate risk, and on forward-looking risk assessment. And we do this while supporting proportionate, flexible approaches to allow insurers to test new solutions while ensuring strong insurance protectors and bear value. In this way, the insurance sector plays a crucial role, not just in insuring, but also in preventing and thereby aligning economic interests with climate resilience and helping households, businesses, and communities prepare for the risks of tomorrow and not only cover what is there today or maybe even yesterday. So we also strongly believe that private insurers should remain the first line of defense against losses. It's the first line of defense. Their capacity to absorb losses can be further enhanced by other market-based mechanisms such as reinsurance and cat bonds, and we see that happening. Still, private solutions on their own cannot fully shoulder the impact that we see of very extreme events. There are climate risks that private markets alone cannot absorb because they are too large, too correlated, or too complex. European coordination here can enhance the climate insurance landscape through robust frameworks that address shared challenges. And here we can really make use of the strength of the fact that we are one EU, we're one single market. Smaller countries may feel that they need to deal with it on their own, and I would say you don't. There's a huge market, and yes, there are forest fires, yes, there are floodings, but fortunately they're not always at the same time. And so how can we also build resilience together? European coordination can enhance the climate insurance landscape through very robust frameworks and shared challenges, and EIOPA has worked alongside the European Central Bank to develop a set of policy options to increase the uptake of Nat Cat insurance to reduce the climate protection gap. Then we made a second paper. So the first paper is this letter: consumers, insurers, reinsurers, capital markets, and maybe also public-private partnerships. Then we made a second paper also with the ECB, and here we outlined a two-pillar structure that really focuses on that last step: public-private partnership, not at a national level, but at a European level. And we made two pillars there. The first pillar calls for public-private EU reinsurance schemes. And this would pool the private risk and expand insurance coverage across member states. The second pillar then is really a disaster fund that is a backstop. It would focus on enhancing public disaster risk management, and it would call for EU-wide coordination. And we built these two pillars on a study of 12 public-private partnerships for Nat Cat risk, trying to understand how these systems work, how they work on resilience, how do they work on affordability, on availability. And based on that and identifying good, maybe best practices, we came up with this proposal. Now, the decision to establish such mechanisms will, of course, rest with political leaders and key decision makers at the national and EU level. But their mere proposal, the proposal is really there to stimulate that discussion, to inform that discussion, to also show there are ways to get there. And together, these forms of cooperation that we then introduce in this paper would strengthen economic resilience, affordability, and availability. Why? Because what we've shown in that second paper is that the ladder that I just referred to, from individuals and cities taking measures, insurance, reinsurance, etc., is that the other way around, the ladder also works. We see that countries who have a public-private partnership actually have more uptake of insurance, not only a mandatory part, which is often there, but also additional, because people start to get more literate, they start to understand, they get more insurance, and with the insurance incentivizing different behavior, mitigation and adaptation kicks in. So the ladder works both ways, which for us is the reason why EIOPA says we do not need one single part of that ladder to act. We need them all to start today. So I'm going to close on this note, ladies and gentlemen. The climate protection gap is not going to close on its own. I think that is clear. There is also no single sector that can solve this challenge on their own. And there's also not one single country that can solve this one on its own. All stakeholders have to play a part, from individual citizens and businesses to insurance and reinsurance to national governments as well as the EU. So I want to conclude on this thought. Climate change is definitely reshaping our risk landscape, but it does not have to reshape our capacity to protect our societies. We have the knowledge, we have the tools, we have the institutional framework, and most importantly, we have a shared commitment to safeguard Europe's future. And so EIOPA will continue to champion this agenda, committed to protecting policyholders, safeguarding financial stability, and supporting an inclusive, resilient, and sustainable Europe. So today, I look very much forward to diving into the details on how we can do that. I'm very grateful that you chose this topic for your conference. Thank you very much. I look forward to the panel. I look forward to talking to you. I will be here during the day. And I also look forward to the next panel that will include also my colleague Marie, who is a key player in the work we do here at EIOPA. And I wish us a good discussion, but moreover, I truly hope that when we leave at the end of this day, we have a lot of inspiration to not only for ourselves, but also anyone we then talk afterwards to really start dealing with this product and make everyone on our ladder move. Thank you very much.
Thank you, Petra, for your insightful speech. At the beginning, I got a feeling that future is very gloom again on this field, but then the second part of your speech give us the hope and quite clear guideline what we should do, and I think there is a lot of work ahead of us. And going further, I think that the second panel quite nicely links to your speech and will give us the overview of how this issue is big in international scope. So I would like to invite the panelists for the second session, Pablo Antolini and Michal Okal, Marie Schloer-Mendes, sorry, Katja Vevpetic and Leich Wolfram. So Pablo will moderate the panel. And the QR code should be on the screen, and you can ask the questions. So thank you.
Just open it and I will open it. Okay. Just open it and it's automatic, yeah? Okay. Good morning to everybody. My name is Pablo Antolin. I work at the OECD, and my function today is just to moderate these 4 experts. I'm not going to say much. I'm not an expert on these issues. But I have that pleasure of having the 4 of them. First, we have Lee Wolfram. We work together at the OECD. He is really our in-house expert on issues related to climate change, and he will be talking about a framework to assess whether we need a government intervention, the type of government intervention, and some examples that he has been collecting across the world, not just European countries, but also Southeast Asian other countries. Then we have Katya. She will give the broad IAS perspective, but also might say something about how this is dealt with in Slovenia. And then we have Marie from EIOPA, supervision. And then we have from the private sector, we also need to know the private sector. We have Michael here. So we hope that we'll be developing from what Petra has said in his introduction. We are going to focus more on how these things are being implemented or could be implemented in the real world. We are going to organize the discussion. I will be asking questions to them, which obviously we have already talked between us about the type of questions, because the point is for them to really emphasize what they know and their experience, so you can learn from that. There will be 5 minutes, 1 question to each of them, then a second round with another question, another 5 minutes, and then we'll have time for questions from you to the audience, to either of them, and you will have to answer those questions, and those ones are not as prepared as the other ones. But let's start with the session, and of course, the first question goes to Lee. So, obviously, given what I just said, what are the main findings from the OECD work on how government should respond to protection gaps? The floor is yours. I will be controlling the time.
Okay, great. Well, thanks, Pablo, and good morning, everyone. And thanks very much to the National Bank of Slovakia for the invitation to contribute to this discussion. So I actually thought, as the first speaker in this session, that might be useful to provide a bit of context, but I think that was done really well already. So I think I can, hopefully that'll definitely keep me under 5 minutes. So actually, I'll try and go a little bit more into some of the details. So first of all, I think it was said, very clearly that obviously this is an issue for countries, for people, for society, for public finances, for financial stability, and we all know that insurance has an important role to play in sort of reducing, the consequences of these kinds of events, and ultimately the overall impact. But I mean, when you look at really what sort of drives protection gaps, so protection gaps occur basically when households and businesses don't acquire adequate coverage for the risks that they face, because either adequate coverage is not available, it might not be affordable, or because they don't see the need for it or the value of purchasing insurance against these risks. So addressing protection gaps is really about reducing the gap between the cost of coverage that's offered by insurance companies and what households and businesses are willing to pay, how they value that coverage. So governments, regulators, supervisors, and insurers, but I'll focus on the first 3, can really contribute to reducing this gap in different ways. So of course, what can regulators do, for example, to lower costs? The most obvious thing is they could reduce regulatory burdens, but that's not necessarily going to be very, very effective if it ultimately leads to insurance company failures, for example, if capital requirements are low and insurers don't actually have the resources they need to make the payments, or if claims payments are delayed or just become unpaid. Because this ultimately will reduce customer trust in insurance and very likely their willingness to pay for that coverage. But there are many other things that they can do to support lower insurance costs. So they can support the availability of data for underwriting insurance coverage to improve risk assessment and reduce uncertainty, because insurers and reinsurers as well tend to charge higher premiums when there's greater uncertainty and lower quality data. They can enable insurance companies to experiment with new technologies, and this was mentioned by Petra, that can ultimately reduce distribution, underwriting, and loss adjustment expenses, while ensuring, of course, that consumers are treated fairly and that trust in insurance is maintained. They can allow the transfer of risk, allow insurers to transfer risk to international reinsurance and capital markets, which allows for diversification of domestic risk internationally. And when a disaster actually does occur, it provides a source of capital, external capital, and external funding that shifts some of the burden away from the domestic financial system. And most importantly, they can invest in risk reduction, because ultimately premium levels reflect the level of underlying risk. If the risk is reduced, premium levels or premiums should decline as well. And of course, it's important to note that insurers have a big role in this as well, not just governments. And I think Marie's going to speak in more detail about this. So how can governments increase the amount that households and businesses are willing to pay for insurance? They can work to improve risk awareness and insurance literacy, of course. They can also limit, as was mentioned by Petra, the post-disaster financial assistance to those that could have otherwise acquired insurance. And making sure that not only do they limit that, but that households and businesses are actually aware and believe that governments will really not provide such assistance when a disaster occurs. And I think one of the things that we found makes a significant difference is encouraging, if not requiring, insurance companies to offer insurance coverage for all natural hazard risks, because this ensures that the insurer or the intermediary sort of leverages that opportunity, that interaction with the households and the businesses to really provide an opportunity to share information on risk, what the scope of the coverage that they're offering is, what's not included in the coverage, and the consequence of not acquiring insurance. So just to give a practical example from outside of the EU, is one from the United States where first of all, flood insurance is sold as a separate insurance coverage. And I think there's been a number of surveys that have found that either the number one or number two reason why people don't buy that insurance is because they think that it's in their coverage already. They think they're already covered. And so there's obviously this failure in communication, this insurance illusion, as was alluded to earlier. So if I could make just quickly one last point, even if governments and supervisors and insurers do all of these things, there can still be situations where government-supported financial protection will be necessary, so where governments need to offer insurance, reinsurance, or some kind of backstop for some perils or for some of those that are at risk. And so as Pablo mentioned, we recently launched a report. It's called the Financial Protection Against Catastrophic Risks, Flood, Fires, and Other Major Risks, that includes a framework to help governments decide when there might be a need to intervene in this way, and if so, how to intervene. So we don't necessarily think that offering government-supported financial protection will be the first resort for all countries. We do suggest that the first step is really to understand what is driving protection gaps, whether it can be addressed through some of the things that I just mentioned, and also what the impact of not intervening would be on the economy and society more broadly. So for example, if there is no insurance coverage available for a given risk, would it disproportionately impact vulnerable parts of the population? Or would it hinder economic activity, such as by limiting the availability of credit or the ability of individuals and businesses to contract with each other, for example? So unfortunately, in a world where we're seeing increasing climate risks, this framework and this guiding set of principles for how governments need to consider the need to intervention might unfortunately become more relevant. And I'll stop there. Thank you.
Thank you, Lee. So we'll talk about that afterwards. So now, Katia, you are going to give us the International Association of Insurance Supervisors view. So how supervisors help closing the protection gap, and what kind of activities are planned there in order to do that, if it can be done. So the floor is yours.
Thank you, and hello to everybody. So I will try to somehow recap what Leo already mentioned. So in general, there are two steps in closing the gap. The first one is to set the foundations, so like sound regulatory environment, like risk awareness promotion, like assessing the gap which is there, and also promoting the prevention measures, which is, yes, like Petra said, more and more important. So the role of supervisors here is data. You mentioned data. It's all about data. So supervisors are in position where they can collect and analyze and let's say then also share this analysis of data with the industry. So that is one important role. And by that, they can also promote modeling, which is more and more important as the historical data is not enough anymore. Of course, they can, or we can analyze the gaps and the causes for those gaps, and therefore then help the policymakers, the governments to set the measures. They can, or we can together improve the risk-based elements in the solvency regime. As one revision of Solvency II was already done in that way, we are waiting already, EIOPA is already working on the second round where the impact underwriting will be better recognized in the standard formula. And of course, you mentioned sound market conduct supervision, so everybody is aware what the fairness, fair treatment is, and also the transparent claims handling. And then, when we have these foundations, we are looking for solutions. So one is to promote the insurance and insurance uptake, and the supervisors here, of course, they can enable the stable regulatory environment so everybody knows the rules, and also to remove the barriers and thereby promote innovation in the products, in the approaches. And then supervisors can enable access to the risk-sharing mechanisms like global reinsurance market. So surely we don't want barriers there. And then for other solutions like private-public partnerships, like pools, which are also becoming more and more important as the risks grow, supervisors can help with advice on governments, on technical advice, on design, on monitoring. So it's a lot of activities that IAS thinks that supervisors can and must take. And for the organization itself, IAS has been, let's say, in the last few years quite active on that. Also in cooperation with supranational organizations like OECD and World Bank, and also for G7, several reports, researches, papers were issued. And now we try to move also to more practical matters. So now inside the Protection Gap Task Force, which is there, several streams were formed where we strive for improvement of IAS webpage, the public accessible, and also members extranet on insurance gap protection. We will try to put there the repository of initiatives, because there are so many initiatives there that it's hot topics, and so everybody is doing something, and why not communicate that to all the insurance and supervisory and all the communities, and we are collecting that, and also the gap protection studies and private partnership, public-private partnerships. So it will be, let's say, at the end of this year, put on the website to searchable and interactive way. So a lot of activities going that way. So
Thank you,
I
Katja.
will close with that.
It's always good to have information on what others are doing, to learn from the experiences and to understand what works and what doesn't work and under which conditions it works. Moving on to Marie. Nice to have you here. Well, Petra highlighted the importance of placing prevention measures at the core of the solutions to address the protection gap. So she mentioned that you are in charge of doing these things. So how are you approaching this ambition in practice?
Thank you for the question. Good morning, everyone. Indeed, I think we have been working on the protection gap since a couple of years now at the EIOPA. And what became very clear when we talk to external stakeholders, many people, they talk about increasing the insurance penetration. That is an obvious way to, well, at least close a bit more the gap. But what we also became clear about is that this will not be sustainable, because Petra mentioned problems of affordability, problems on insurability. So we need to first think about prevention measures. And this is really a narrative that we at EIOPA, we really have now put at the core of any solutions. And what I would like to bring to you today, many things have already been said, but really bring two concrete examples of what we are doing at EIOPA to really put prevention at the core of solutions to address the insurance protection gap. So the first example, it's a work we like to call Protect, and what have we done there? So this work was really about raising awareness to all European citizens about their risk to natural catastrophes. This is very important. We see in other parts of the world, in the US, for example, this is much more developed. But looking at the trends in Europe, we need to improve this awareness to everyone. So this is a key message that we have. And of course, what we also realize is that we cannot just give the information of the risk. Okay, you enter maybe your address in a tool, you see what is your risk of flooding, but we also need to tell to the people what can you do about this risk. Because indeed, there are some measures that can be taken by government, yes, and they are very important, large-scale flood defenses, but also private citizens need to be more aware of what they can do to reduce their own risks. Also, maybe before buying a house, you might need to know, well, maybe I need to have some more adaptation measures if my house is maybe next to the river. So these are all very valuable information that we should all have. And this is what we are outlining in our work that we like to call Protect. So it's a paper we have published end of last year. And what have we done? We have looked at 77 tools that exist out there at international level. There are many tools that exist already, done by some national government, meteorological institutes, or also by the private sector, by the insurers. There are also some developing their own tools. We have been looking at them, looking at the different features, and we come with a summary of all these different 77 tools in our paper. We wanted to take a bit the best lessons that we could see. And our narrative, what we feel is very important with such a tool is indeed first give the information of your risk in a very user-friendly way. Because we have also seen that there are many tools that exist, but sometimes, developed by a meteorological institute, they focus a lot on the science, but not so much on how do you bring this message to people. And this is a very important element that we see when you think of developing these tools. And then, of course, prevention measures. We need to give this information, and also in Europe we need to provide more. I mean, we are looking at some national examples of where you can find websites who explains to people what they can do to actually mitigate the losses. And unfortunately, we haven't seen enough of that. So this is really something that we need to improve, and also at EIOPA we hope to contribute to this narrative. So this is the first example. The second concrete example, and it was already a bit mentioned by Petra before, is indeed let's also look at what we as EIOPA we can do to actually also incentivize what we like to call impact underwriting. So really, what can insurers do to contribute and incentivize the policyholders to really take adaptation measures? And so we have recently now a paper that is under public consultation until tomorrow. So if there are some people still interested in looking at it and providing your inputs. So indeed, we have in Solvency II, in the Pillar 1, capital requirement for natural catastrophe risks. Let's have a look to what extent these parameters actually really capture prevention measures. And if they do not capture them properly, can we maybe propose also options to change a bit the way we parameterize these parameters to actually better capture these adaptation measures? So this is exactly what we have in this paper. We are outlining different options. We are discussing pros and cons. And the idea now is, of course, then to take all the feedbacks we will get from this public consultation and to finalize this paper. So you see, these were two concrete examples, really to see how important it is that we all think together at having adaptation at the core of any solutions for the protection gap.
Thank you, Marie. Well, now we know things we can do. So now let's go to the view of the private sector, Michael. So what is the overview of insured and incurred losses globally from natural catastrophe events? What trends in the frequency? We have been hearing that the frequency probably is a serious problem, and the severity, which is changing the models, as Petra just suggested. And if we don't have proper models, it's very difficult to price accordingly. So how is this affecting, how is the insurance gap developing given this more frequency and severity from the point of view of the industry?
Yeah. Thank you very much, Pablo. Thank you very much for the invitation. It's a pleasure to be here. And maybe I'll start a bit differently. So we spoke about this underwriting with impact. So I think this is what we try to do a lot at Swiss Re. My team does facultative underwriting. So we actually look at single individual risks. Most of reinsurance globally is done on portfolio levels. But my team deals with the concrete risk, which is quite interesting then to actually see the impact of changes in models on individual businesses, and to assess and be able to assess how adequately priced certain risks are, at least from the perspectives of Swiss Re global models. To answer the question, so if you look at the history, past decades, it's very obvious that the amounts of economic losses caused by natural disasters is going up consistently. So what is also going up is the insurance contribution or reinsurance contribution to that. These two lines go up together. And even though we have globally observed a slight increase of a percentage of insured losses on total economic losses caused by NatCat globally, the gap in the monetary terms is still growing, obviously. Now, if we look at last year, there were more than 200 billion economic losses caused by natural disasters around the world. More than 100 billion of them were insured. So it's still less than 50% globally. That insurance gap in Europe is bigger, unfortunately. But what is more interesting, and we haven't spoken about that aspect yet today, or not too much, is what actually happened last year. We call it at Swiss Re a secondary perils year. And that is a very fundamental discussion to have, because for decades, the industry has focused a bit more on the primary perils, the earthquakes, the named storms, the typhoons, the hurricanes, maybe the fluvial flood from the big rivers. But what we've observed consistently is that these secondary perils, this sort of more hidden ones from a global perspective, are starting to cause more and more losses. That's the pluvial flood, the flash floods, convective storms, wildfires, hail. And we need to start to be much more observant on those and pay more focus on them. Last year, I said it was a secondary perils year. Yes, that's an exception because we didn't have that many hurricanes. We didn't have massive earthquakes as maybe in some of the years, this big event. So it might deviate a bit. But still, 90% of NatCat losses last year globally were caused by secondary perils, 90%. That's a big exception. It's not going to be like this every year. But it just points out the importance to pay more attention to that. The secondary perils have few issues. They're much more difficult to model. They're always also much more regionalized from a perspectives of insurance. So it's sometimes very difficult for insurance and even global reinsurance companies to assess it. We're making an effort at Swiss Re to make progress there, to have in our underwriting also, for example, introduce expected losses from secondary perils. It's not easy, but we're paying fundamental attention to that topic, and I think this needs to continue to evolve together and to make a better effort to also address this part together. Maybe some of you know we also, our models, Swiss Re develops our own models. We also offer these models to our clients and even to brokers. Let's not forget about brokers. I haven't heard that word today, but we also need to realize that they are an important part of the industry and they can be helpful in some of the aspects of closing the protection gap. The losses are growing every year by about 5% globally. So this needs to be also taken into account. And I really welcome, and we will talk a bit more about that later, I really welcome the various references to a multidimensional solution. So that we have insurance and reinsurance private capital in place, we believe is at the cornerstone in terms of deployment of capacity, in terms of paying out losses, but also insurance and reinsurance plays fundamental role as a messenger. We have the view of the risk and we do price it. Yes, of course, we need to make profit. We're companies that make profit. We need to pay the cost of the capital that we have. But we also, thanks to our models, are able to assess the technical price for the risk. And this is a message that we need to share to the insureds, but we also need to share this on a higher level, on the portfolio levels, to the governments and public institutions. And if this solution is not multidimensional, starting from risk prevention, risk mitigation, awareness, incentivizing the demand, and supporting the supply where there are gaps, we believe globally the supply of capacity on the insurance and reinsurance level is fairly broad and fairly good. However, there are pockets where even supply might need to be reinforced. Without all these factors working together, those gaps are not going to be closed efficiently and sustainably. And yeah, we'll talk a bit deeper about some other aspects.
We'll continue talking, and there is a few questions. Well, I don't know about you, but personally, I didn't know about primary and secondary perils, so thank you, I've learned a lot. It's not my area of expertise, but thank you. And it's really scary to learn that last year, 90% of all the increase of cost, or the total cost, I don't remember if you say the increase of the total. It was
insured losses, yeah.
Insured losses was due to the secondary perils, but quite insightful from my point of view. So Lee, what governments can do to understand the magnitude of the drivers of these protection gaps, taking into account what we have been talking here and also your framework? You mentioned the governments have a role if certain criteria fulfilled, so how do they?
Sure, well I think maybe one thing that I think is important is really, do governments need to do more to understand these protection gaps and the drivers of these protection gaps? So I think, as I mentioned earlier, the significant climate risk and natural hazards lead to significant economic disruption and potentially material risk to financial stability and public finances. If impacted households and businesses start defaulting on their loans, for example, or if the government is forced to take on unsustainable levels of debt to help people recover. So as Michael discussed, Swiss Re and some others provide this critical service in monitoring the level of economically insured losses across the world. And we use this data in our analysis all of the time. It's the best data that we're aware of in terms of assessing protection gaps and sort of providing these comparisons across countries. The one thing I think it doesn't quite do, and it's not meant to do this, is it doesn't really give governments any sense as to what is driving those protection gaps. So just, I'll just give you an example. I mean, here in the Slovak Republic, using Michael's data, which they've kindly given us some access to, I've estimated or calculated that about 7% of the economic losses in the Slovak Republic between 2000 and 2024 were insured. And it's about 9% in the case of floods, which is, of course, one of the main perils here. So this is lower than in Italy or Poland or Slovenia, and it's quite a bit lower than Czechia, Germany, Austria, and particularly Switzerland, but it's similar to other countries in the region. But we don't really know why it's lower here than it is in Czechia or Austria. So it looks like, for example, I think Slovakian insurers automatically include flood coverage with property insurance, so it's not this insurance illusion issue necessarily. But maybe it's because not enough people have any property insurance at all, or maybe the cost is unaffordable in high-risk areas, or maybe insurers decide to exclude flood coverage, for example, in high-risk areas, or decide that they're not going to offer any property insurance at all, since flood is included in the coverage in areas where they don't really want to assume the risk. Or maybe it's broadly available, and maybe it's affordable, but people expect the government will help them recover and repair their homes. But as I said, the gap between insured and economic losses for any given event or for any given year doesn't really tell you anything about what those drivers are and what people can do about it. So some supervisors, and ultimately I think what the data collected that's by insurance supervisors doesn't really provide that information either. Supervisors tend to collect data on premiums and claims overall and various solvency data and things like that, but it doesn't really tell you how many people are insured and insured for what and what the cost of that insurance is. So some supervisors and some other government entities are started collecting this kind of data in different ways. And at the OECD, we're actually working on collecting country experience in the area to basically see what works and what some of the common challenges might be. What we've learned so far is that maybe the most common approach is probably the most straightforward one, which is just to collect information on individual policies in force from insurance companies and compare that to things like building inventories and census data and income levels to sort of just decide or determine where there's gaps in take-up or where there could be affordability issues. This is not, of course, a simple undertaking, collecting millions and millions of individual policy information and could raise privacy concerns and a number of things. But ultimately, it's one of the means to really get to this understanding of what the protection gaps are, what the coverage gaps are, where the affordability challenges might be. There are some examples also of other approaches. So just to give you some ideas. So in Ireland, for example, the supervisor actually used the risk scores that are commonly used by insurers when they're underwriting flood risk as sort of an indicator of whether or not insurance might be available for a specific property or whether it would be affordable. So if the risk score was too high, then they assumed that coverage was not available to that address and that household or business, and that ultimately that would be a protection gap. In New Zealand, it's actually the Treasury that's monitoring this through a consulting company that basically monitors, on a regular basis, the cost of insurance and the availability of insurance through online quotes from insurance companies. And so they basically have a portfolio of addresses across the country, and they go and they collect these quotes and see if, for some reason, there's less insurance companies offering coverage at this address or the cost of insurance is increasing. And then just in Australia, just as a last example, they actually did a fairly extensive exercise to ask insurance companies to estimate what the premiums might be for basically every address in Australia out until 2050, taking into account what the impact might be of climate change on availability and affordability. I know EIOPA has also done a lot of work on making data on protection gaps available through the dashboard on insurance protection gaps for natural catastrophes, and uses a number of innovative data sources and measures for countries across Europe. And I think if you have any really really difficult questions about that, Maria is here and was instrumental for that and knows more about it than I do. But ultimately, yes, I think this is a critical, almost first step that governments need to take to really understand what the gaps in insurance coverage are, what those drivers are, and then ultimately looking at where where there might be a need to intervene more broadly to make sure insurance is available.
Thank you, Lee. It's good this is one thing we like to do at international organizations, to learn from what countries do. I hope it has the same, does the same. So now we have the opportunity from somebody in Slovenia, Katja, to learn or to share with us the experiences with the supervisory initiative after the major flooding in 2023 in Slovenia. And Lee has talked about a few other countries, so please let us know.
Yes, so in 2023, we experienced the major flood. It was a secondary type of flood, so pluvial, and so not moderate at all.
Yes.
And we experienced those 15% of GDP loss that Petra was talking about. So really, 2/3 of the country were under the water, literally. And what then? So as supervisors, we were, let's say, quite happy to see that our insurance companies are really good at claim handling. So they did much better job than state that most of the people rely on. So this underinsurance is mainly due to the fact that we have a law which enables that the state has to repay the losses to some extent. But we noticed there is, of course, a misunderstanding of people. What do they have insured? So. As supervisors, we went through the products, we examined the general conditions, the transparency of them. It's really hard to read them sometimes, so we pushed for some more transparency. And also we checked the flood sublimits. So in Slovenia, it's basic insurance, and then the flood and earthquake cover are on top of it. You have to buy it separately. So there's quite common to have sublimits for flood coverage, and it was used and abused it to lower the premium, of course. And so so when you buy the insurance, you are debating with your agent how to reduce the premium, and when the event comes, then you expect to have the full coverage. It doesn't work well together, but as supervisors, then we pushed that in those standard packages for homeowners, the flood sublimits are increased. So we also issued some easy-to-read publications, like "Let's Insure Our Home" or "Let's Not Wait for Earthquake." And then we actually conducted the insurance protection gap study for flood and earthquake. We try to do it on publicly available data, so to be able then to present it to the government. They couldn't say that, oh, this is the data from insurance companies, it's biased. But yes, the results were not so reliable. We used two methods, and it was comparable and also comparable to what insurance companies think. So it was really a basis for discussion then. Then we held brainstormings with all the providers of property insurance. So there are 5 of them in Slovenia. To collect the ideas how something could be improved, how to start closing the gap. And we also contacted our fellow supervisors in countries with similar problems. Italy with huge underinsurance, and Portugal with major earthquake risks, like Slovenia. With Austria, who are trying to move a long time, and so at the end, 1 year after the flood. We initiated the forming of a common working group where we are working together, representatives of industry and then of state, like Ministry of Finance, Ministry for Natural Resources, and us as supervisors. And our goal was to identify the major problem, the most pressing problems, and to propose the measures which can be implemented quickly, and then also work on the measures which for the later stage as well. Quickly, it was the time we wanted to use this awareness after the floods, and also with the coming elections and political will, which is very needed for all the changes. We fear there's not enough time. But we found out that, that we have available products that more or less they are affordable. But there are no uninsurable risks, let's say so. So you can buy insurance. And the market is working quite well, but the uptake is not going up as it should have. And we, as the most pressing issue, we identified the multi-apartment buildings. So we focused on homeowners, and multi-apartment buildings are such that if not all the building is insured, then with insurance proceeds, you can't start as a single owner. You can't start to rebuild. So you need to insure the whole building. And what is adding to that pressure is that the peak of exposure in Slovenia is Ljubljana, and Ljubljana is very earthquake prone. Right. So what we proposed is mandatory insurance for multi-apartment buildings, including earthquake and flood insurance, which we thought it will then drive also other policyholders to think more about it. And it is also so that the multi-apartment buildings have managers of buildings who has to arrange the insurance, and the only measure taken here needed is to say that what kind of insurance managers have to provide. So it's really, it could be implemented quickly.
Sorry to interrupt you, Katia, we need to.
Yeah, just the entry ticket for this mandatory insurance is to pay to the state to subsidize the premium for those homeowners who really have no income, and to use the existing social state mechanism for that. And yes, the cost for that would be really low to the result. So when we start with 80% insurance gap for earthquake, then in urban area this will go down to 30%. So it's a really huge potential relief to the state budget in case of event, let's say so.
Thank you, Katia. Now we are going to change a little bit tracks. We have talked about examples here from Lee, and in particular Slovenia. Thank you, Katia. But now I want to move into one issue that EIOPA seems to think, and all the other speakers have also highlighted, which is data and digital technology and IEA and all of that. So because they might help in closing the protection gap in terms, as they always say, in terms of identifying risk better. As you mentioned, we need to do that. So how does you see this working in order to close that gap? Technology, basically.
No, thank you. No, indeed, I think it's difficult to have an event on the insurance protection gap without talking about data. I think that I have heard in every single speech so far. And also, why is it so important? Because this is the way to make the insurance protection gap visible. You need to be able to measure it. You need to be able to monitor it. And this is also why we have spent a lot of effort to develop our insurance protection gap dashboard, really with this aim to measure it for different perils. We know the protection gap varies a lot. If you look at windstorms, flood, or earthquake, the protection gap is very different. And also in Europe, it varies significantly from one country to the other. Each having their own national solution. So, of course, sometimes events are also cross borders. So that makes it quite also challenging. So we need data. And with the development of the dashboard, I think we had this aim to estimate it, to monitor it. But what became very clear very quickly is that this is a very good way to show actually the data and the model gap. Because when developing, we really saw we wanted to have a common methodology for all European countries and for the different perils. And of course, you can imagine that that really became a big issue when trying to do that. So with this dashboard, we like to talk about the data gap. And we have heard before there are some databases that exist, for example, on historical loss data from Swiss Re, Munich Re. There are few open source databases, but definitely this was not enough for us to be able to develop our protection gap dashboard. So we also thought, okay, what can we do as EIOPA to actually also improve the situation? And we have heard from Lee also, supervisors like to collect premiums and capital requirement data, yes. But indeed, I think with these emerging issues of a protection gap, we need to also look at other type of data. And this is exactly what we are proposing in the final report, looking at reporting data. So also if we could collect more data on claims, so for natural catastrophe events, and also exposure data, so also to be able to do then the modeling of current and future protection gap. So this is exactly what we have proposed in the final report, and then we will see what happens with that with the European Commission. But that's really the aim, to improve a bit also our landscape and knowledge on what type of data is available to supervisors to really monitor the protection gap. So this is one element on the data. And then, of course, we talk a lot about model gap. We talk about the need of innovation. We have talked about secondary type of perils. So these need new type of data, new type of models. And so we also thought, okay, where can we have a look? What is available? And so we started very recently a new collaboration. So this is very new. For us, it's very explorative, I must say. We are learning every day with the European Space Program Agency. And of course, this is really going a bit beyond, what we are used to. So I think it's always the beginning. We first have to understand each other. We use different vocabulary, so it's a bit, the challenge in the first meetings. But this is very interesting because we also want to think, how can we and the supervisory community maybe benefit from using Earth observation data? We know insurers are doing that a lot. I'm sure Swiss Re is doing it already. But can we maybe also use these data that are out there, and there are some data that are also open source, to use that for our own purposes? And this is exactly what we are also trying to explore. Here we could, for example, think, we have heard about this big event in Slovenia. For example, you have tomorrow a big event, and a couple of days later, you can have an image of where the regions that are impacted, and this is amazing. And then you can also maybe as supervisor think, okay, can we maybe use this data to identify quickly which companies might be affected, and maybe also follow then how claims are settled, really to ultimately help people. So these are, of course, ideas. We are in the brainstorming phase. But I think this is what we need today. We are facing such an issue with the protection gap that we need to go a bit beyond what we are used to look at and really assess new type of data. And I think that's also going to be the next panel.
That's what I understand. Thank you. That's really impressive. Congratulations, and I hope it works well. Michael, well, what are the most effective ways and approaches Swiss Re sees towards reducing this protection gap? We have the
Yes.
data, we have the information.
Yes.
What are your views?
Yeah, so I think we already touched upon a lot of things, so I'll try to summarize it, and also maybe on purpose I will be a bit provocative as well. Also, we're in Slovakia, I'm a Slovak citizen, and we know that the protection gap in this country is quite clear. You know, if you remember Boris, which happened a few years ago when it flooded Central Europe, the protection gap in the 4 countries that were most affected, Czech Republic, Poland, Austria, Slovakia, the biggest protection gap was here in Slovakia. Was only 20% of Boris incurred losses were insured. It was more than 50% in Austria and Czech Republic. It was 30% in Poland, which is also hardly impressive, but better than here. So I think first, a bit of local perspective, you know, we need to look at ourselves what we can do better. And I said it's a multifaceted solution. So it's not just insurers, reinsurers, it's the public institutions. And that circle needs to work all together. And let's start with the first thing, and that is the risk awareness, the loss prevention, the mitigation measures. We have seen the uptake in natural catastrophe losses. Actually, what Swiss Re thinks and our data shows globally is that the biggest reason for that is higher exposure of assets that are affected by cat events, and then, of course, inflation. The uptake of natural catastrophe activities is there, but is not the main cause of the growth of insured losses or economic losses due to nat cat events. It's really the growth of exposure. So first, we need that public institutions, governments, they take proper actions in terms of construction codes, incentivizing the right protection measures when it comes to flood, whether that's on individual building levels, business levels, homeowner level, or just not building in areas anymore that are heavily, for example, flood exposed. Let's build elsewhere, or let's build in a different way. This is very important that we don't continue to create that exposure problem further and further, where it shouldn't be, right? Of course, you have big cities, you cannot move populations that easily. It's not about that. Where we already have the exposure, where we already have businesses, homeowners, we need to make sure that the protection measures are in place, that are improved. I think this improvement of the demand side is all of us working together, including insurance, reinsurance industry, brokers, but also government and institutions. So this will help incentivize purchase. The customer, the insured, should not be penalized for buying insurance. If I buy insurance, I should be rewarded for it. If there is a nat cat event and government's going to pay regardless, what kind of incentive, behavioral incentive do I have to buy insurance? Very little. So I'm not saying governments should not pay if people are in harm's way, if there is a cat event. But if people know they can rely, the government's going to come out and pay anyway. Now, how can we expect that people will start buying insurance? I've seen tons of, and of course we do corporate business, I've seen tons of completely insufficient insurance policies, both on property and liability side, insufficient limits, sub-limits for, you've been talking about the sub-limit in Slovenia. And this needs to also change. If we put tax levy on insurance products, is it going to mean the penetration is going to improve? Probably not. If we're going to strip public funding to the Hydrometeorological Institute, which is the key source of early warnings when cat events happen, is that going to improve the loss mitigation measure? If flood's coming, it's coming. But if people know about it, they're going to take shelter, they're going to take action, they're going to evacuate their assets, and we can reduce the economic losses. A few years ago, there were massive flooding in Germany. One of the root causes was really flawed warning system by the Hydrometeorological Institute of Germany. Germany took enormous actions to improve that. Those losses would have been lower if people evacuated early enough. We had a flooding in the region of Valencia 2 years ago. Again, early warning didn't work there. So we need public institutions to realize their responsibility goes beyond. And again, insurance, reinsurance companies too, right? We also have a bigger role to play in sending the signals, in having this dialogue, in providing data. You spoke about data. We'll have another colleague of mine speaking about the that part later. And then we can build a more robust and less exposed insurance gap situation. One or two more things I want to mention that were not discussed too much. Public-private partnerships, this is something that is there, is available as a product. Swiss Re is very open to working with public institutions on that. There are quite a few examples around the world which helped when private and public work together to find, especially in the niche situations where there might be lack of supply or difficult solution in place, today that exists. For example, churches are now insured against earthquake in Italy, thanks to a scheme like that. And another thing, especially with the changing NatCat landscape that is being more and more introduced, and we haven't mentioned it yet, is parametric insurance. It's something that can, again, make the resilience better when you have objective criteria applied to CAT scenarios, and the payout depends on the objective. For example, it could be a magnitude of an earthquake, drought situations, consecutive days of drought, or a flood stream strength when it comes to flooding. So I think all these solutions, if they are worked together, they can bring impact. But one thing to also caution all of us, we're in for a long run. This is not going to get solved overnight, and we need to also understand that we have a long-term commitment and mission to do so. Yeah, I really invite everyone to keep them patience and keep that optimism and spirit of actually getting things done.
Thank you. We have 7 minutes 41 seconds, and the questions that are winners, if I understand this, they give it to me, is in Slovak, so my knowledge of Slovakia, but the questions that have been the most supported by the audience are the following. One of them is related to something you were talking about in Slovenia, but in general. But the first one is, in order to close protection gap, we should motivate private individuals, entrepreneurs to insure adequately. Locally, there is a 10% tax on all non-life insurance. Should not we rather have tax advantage for insure instead? Anybody wants to say something? Should we drop the 10% tax and give a tax incentive, or should we not? That's basically the question.
Well, inside the working group, we were debating how to promote the uptake, and you were also mentioning the tax relief.
Here it was rather the opposite, I think, in Slovakia. Fortunately.
How is in other countries? How is in other countries? Is there?
So I have an example from pension system in Slovenia. So the second pillar, which is voluntary, has a huge tax relief.
Yeah.
But it's not helping it's not helping the uptake. So we talked with insurance companies representatives, and they said, if you subsidize the premium, it's more or less the same, yes. From the cost-wise, but in, let's say, our parts of the world, it works much better than tax relief.
Mm-hmm.
I don't know. So we can go for lowering the taxes anyway, but since
Right.
we are used to the mechanisms of the social state, so you have to finance that with something anyway. So yes, it's always nice to say let's lower the taxes, but we have to lower the benefits then as well. So.
My personal view, given how the tax system works across different European and OECD countries, is in many countries, people from the 4th or 5th decile down don't have to file for income tax. So tax advantages doesn't apply to them. So if you want coverage in those income groups, it will not happen. And in particular in pensions is very clear, but it's in other mechanisms to incentivize through the tax system, if people don't file for income tax, and in most countries they don't have to, if they are the 5th decile down, the tax advantage doesn't work. That's why subsidies sometimes work better, because you can target to the individuals from the 5th decile going downwards. That's the only point. I'm not saying it should or it should not. I'm just saying that when you go into implementing this kind of policies, you need to look how the tax system works in different countries, because it might not work to the intention of the regulator or supervisor.
Yeah, but I think that it's really also about what is the taxation of the insurance policy, right?
Yes.
What is the income tax is a different topic.
Exactly.
It's probably hard to connect, but here we also should think whether...
No, there are two issues here, whether to drop the tax percent, and the other is that Katia, if I understood correctly, was talking more about, is whether to use tax incentives. There are the two issues. And that one, yes, if you want people, don't tax them. If you want people to do something, make it easy for them. The second question, if I might go, that is the other thing is, well, is there any discussion at the EU or the OECD level of any version of mandatory insurance for households and businesses, something similar to the third-party car insurance, when it can be accepted for vehicles, why not for real estate?
Yes, maybe I can start and you might want to complement. I mean, what we are aware, of course, and I think I also mentioned in my previous discussion point, is that mandatory is a very obvious point to discuss in the insurance protection gap. We know that in some countries this is definitely under discussion, in Germany, for example, because currently if you buy insurance for your house, and NatCat is not included. So now what they are discussing indeed to have a mandatory offer. Not necessarily a mandatory cover, but a mandatory offer where you can always opt out, because I think these are very important differentiations. So what we often hear is more a mandatory offer, so that most people wouldn't need to think, okay, I need to buy an additional product, because this is this step that then really creates a protection gap if you have to extract.
Behavioral economics.
Exactly. So this is what they want to change in Germany, and that is very interesting discussion to have indeed, because my neighbors, for example, they didn't even know that they were not covered for floods, for example, because you have to add an additional product.
Right.
So yes, there are definitely discussions to have, but as we mentioned, mandatory insurance is not the silver bullet. We need to talk about all the other topics we discussed today.
Yeah, there is never a silver bullet.
No,
there is
no,
many
no.
things,
But
as you
we
all
hear
have
it
been
too
highlighting,
often.
there are many things that...
I think many times in some political discussion, mandatory is the first one to pop up. But that's not sufficient.
Maybe just to add one thing, I guess the clear difference with motor vehicle is that, I mean, insurance usually is mandatory when the loss is somebody else's. So the concern with motor vehicle is that you harm somebody else's vehicle, somebody else's body, and you don't have insurance coverage to make that payment, and that other person loses. If you don't have insurance coverage for a loss that you yourself will have to suffer in the end, I mean, tant pis, as the French would say, right? That's your issue in some ways. I guess the other concern is that, I mean, should people be given the choice to self-insure and not transfer their risk to an insurance company, and especially for a business? I mean, lots of businesses self-insure. So why are we forcing them to, even if it's not large, pay the profit margin that insurance companies are charging? So, and then how is it different than a tax? So just a couple of the sort of the downsides of mandatory, some of the arguments against mandatory insurance.
So for multi-apartment buildings, you actually have responsibility to the fellow owners, and that is one argument why we went for mandatory just for multi-apartment. But it is on hold, by the way.
And lots of countries do that, for multi-tenant, absolutely.
3, 2, 1. Thank you.
Thank you, Pablo.
Thank you, Pablo, for managing the panel. And thank you for
Let me say one thing I wanted to say. You talk that when you started here in Petra, you were very, very scared. Then you became more positive. I personally believe I become even more positive after listening to that, because there are solutions, there are issues that we know we can do, but we still have to learn. We have to still learn from the experiences of different countries, but we just have to get on and do it. So thank you.
There are solutions that exist. This is very important to say. We have solutions. It's not
Exactly.
that solutions don't exist. We just need to scale them up and improve them and maybe build new ones based on the ones we
So that's the positive side.
It can be fueled, the positive energy from this panel. We can continue discussion over the 15 minutes coffee break downstairs, and we will recollect back at 11:15 here. Thank you.